All right, looks like we're okay. All right, well, thank you everyone for joining us. This is a DI presentation hosted by NAIFA Louisiana. We will be taking questions at the end of this panel discussion. Feel free to type your questions either in the chat or in the question and answer box. If you do want to ask your question live with the anticipation of some follow-up questions, please raise your hand via the platform, and I will be able to then unmute you towards the end of the panel discussion. If you do have all of a sudden a question throughout the presentation, best practice is to just automatically type that into the Q&A. This way you don't have to worry about forgetting it, and at the same time then we can know exactly in which order they came in. We want to make sure we get to as many questions as possible. With that, I'll turn it over to Blake Gillies out of NAIFA Louisiana.
Yep, thanks Artem. So welcome everybody. I'm Blake Gillies, I'm NAIFA Louisiana Programs Chair. And it being Disability Insurance Awareness Month, we felt it the perfect time to bring you really a disability income insurance based program. So we are joined really by some of the best DI experts across the country today. And they are, I'm gonna give just a brief intro to them, and then I'm actually gonna ask them to give you really a brief understanding of who they are, what they do, and really their day-to-day, and what their specialty is in the DI market. So we are joined with David Beck with Disability Insurance Services out of the Baltimore area, Derek True with the DI Center based in Dallas, Texas, and JP Barta and Daniel Duffy with the Legacy Benefits Group out of Lexington, Kentucky. So again, thank you all for taking your time to be panelists on this experts Q&A. And then thank you everybody for taking the time to join us today and hopefully gain some knowledge in the next 30 to 45 minutes. So with that, I'm going to go ahead and start really JP and Daniel, if you can, give us a brief synopsis of what you guys do and how you serve advisors and clients in the really predominantly group insurance space.
Sure. So this is JP Barta. I appreciate the opportunity to speak with you all. We work as a agency slash general agency, working primarily through brokers, financial advisors, things of that nature, to bring group benefit solutions. We do a little individual, but primarily group benefits, kind of as wholesalers to their clients. So we negotiate contracts between carriers, third-party administrators, things of that nature, to bring group benefits for groups ranging from as small as 2 to as large as about 1,000. And we work primarily on I guess a regional basis where we're located in Kentucky. So our focus is really Kentucky and bordering states, although we do expand and have been expanding our footprint beyond. So kind of high level of what we do is just working with brokers and advisors to help secure various benefits at the group level.
Blake, I think you got a mute.
Thank you. So thanks, Daniel and JP. I'm gonna shoot this over next to David Beck with Disability Insurance Services.
Yeah, hey, thanks for having me. Proud NAIFA Maryland member over here. Super stoked to be on this panel with you guys. And yeah, I'm with Disability Insurance Services out of Baltimore. I got quite a big territory. I got Ohio, New Jersey, Pennsylvania, Delaware, DC, and Virginia. And I work in the same capacity outside, but I'm not a group wholesaler. I'm an individual disability insurance wholesaler coming from IDI, BOE, key person buyout. But what I really try to pride myself when I'm working with financial advisors is, one, I want to show them how to increase revenues and increase their time that they have with their clients. And I get to do that by servicing them when it comes to disability insurance and being their extension of their business. So thanks for having me, and I'm looking forward to this.
Yep, thank you, David. Same here, man. Last but not least, my good friend Derek True with the DI Center in Dallas.
Yes, sir. Thank you, Blake, and thank you, NAIFA Louisiana. I am with the DI Center and a proud member of NAIFA Texas. So the DI Center, we are a BGA that focuses on making DI easier nationwide. So we work with producers of all types, primarily in the individual market, much like David. And we do work with everybody from financial planners trying to complete that full plan, all the way down to, you know, benefits brokers trying to take care of the employer clients that they have. And for us, excuse me, we do write mostly individual policies, all the way from, you know, key person, loan arrangements, business plans, buy sell, things like that. And we do a lot in the, you know, GSI or guarantee issue markets as well.
Awesome. Well, thank you. And we're going to go ahead and get started into really why everybody came here, and that's to learn some more about DI. So the first question, we'll stay with Derek for this. It's being that we are in a COVID-19 era right now, what has that done to the current DI market? And then what is your opinion on changes going forward with that? Do you think these are going to be temporary changes or more permanent changes?
Good question. So with COVID-19, it has accelerated a lot of what the carriers were already looking at doing in the individual space, as well as there's some nice temporary guidelines. I mean, right now it's actually as easy a time as there's been to write individual disability insurance. You know, fluidless underwriting has gone up to at least 10,000 monthly benefit for most carriers. There's some looking at, you know, maybe even going beyond that. And right now they're all extending that through the summer for most of the carriers, but there are several of them talking about maybe they keep it, you know, long term, because they've had success with it and it is working, and they're realizing that, you know, we don't have to go get exams on a lot of these professionals and in those markets. So there's a lot going on in that space. And, you know, the risks associated with COVID-19 really aren't morbidity, they're more mortality. And that's why, you know, the DI carriers are willing to take a look at this and keep going.
No, that's thank you, Derek. I think that's some valuable insight in the fact that I think you're right that they more were forced to jumpstart this stuff as opposed to just waiting to introduce it later on. The COVID-19 really forced these carriers to do something and to do it sooner than later. So I'm going to pose that same question to Daniel and JP. In the group world, what has COVID-19 done in the short term? And then is that anything you see that's going to carry over for the future going forward? And really as it pertains to the enrollment process.
Sure. So the biggest disconnect that we've seen is just the employer employee. So, you know, as these different states are gradually, you know, reopening, hopefully we see a little bit more kind of the norm, you know, folks, you know, digging into their contracts, shopping for better coverage, things of that nature. So it's something that we're keeping an eye on, but honestly, in the group world, we have the luxury of a little bit more loose and liberal underwriting. Generally, we're taking some demographic information on the group, the employees, industry, things of that nature. And then a lot of times we have guidelines that are just kind of governed by group size as far as DI limits, monthly amounts, things of that nature. So long term, yet to be determined. We're tracking this just like we are on the health insurance and other benefits. You know, you got a 90 or 100-day elimination period and folks aren't working and maybe receiving an income. Those are triggers for a claim right there. So we're getting close on some of that stuff. So yet to be determined. But as far as any immediate, we just see that there's a lot of the traction that we would normally see about this time of year. Folks kind of dusting off that employee census, maybe taking a look at their group policy, seeing what else might be out there. That has slowed down quite a bit. But I wish I could get my crystal ball to work on the long-term effects. But I can tell you we're tracking it now and what the different states are doing out there. So.
Hey, when you get that crystal ball working, shoot over, you know, a piece of it over here. I know
No,
I like to see
no
it.
doubt about it.
So next, I'm going to shoot this to David. So I know you use Zoom technology a lot throughout your practice. Talk about, is that something that you were forced to do with COVID-19 and the pandemic, or is that something that you've always done? You just are now seeing more people really do something you've done in the past.
No, so for me, I started it before COVID-19 because of how large my territory was. So getting up to in Maryland, you can get to Pennsylvania really easy, to get to DC and Delaware, but I can't get to Ohio really easily without jumping on a plane or even down to Southern Virginia. So I was like, we got this technology. I work from my house. Why don't we use Zoom anyway? So I signed up before COVID happened. So I was just lucky to be ahead of the curve in that, right? To where you can still have the face-to-face meeting, but you don't have to sit an hour and 15 in traffic or whatever, hour and a half to get to Philadelphia from where I am.
Yeah. Awesome. Thanks, David. Derek, I would pose that same question to you, but I want you to speak really on, in your mind, what do you see carriers doing from a technology standpoint, being that, you can't deliver policies really anymore. And I think a lot of that's going to change. So what are carriers doing from a tech standpoint to help people write more DI?
Great question. The carriers actually, a lot of them have already had this technology for some time. This is really not new technology for them. It's more that we're seeing a lot of producers finally take on and use what's been there. And again, like I mentioned before, the acceleration for those carriers that maybe were a little behind the times, but looking at electronic delivery, electronic applications, they've really fast-tracked that. And we're seeing more and more where the carriers aren't just allowing their own platforms on their own websites, which can sometimes be a little tricky or difficult to use with logins and things like that. But a lot of them are okay with DocuSign as the primary one, but you also see Write Signature or Adobe Sign. You do have to go through the steps to make sure it's a proper signature, but that's really easy to do with the different carriers. And that's been huge because the carriers right now do not want physical policies. I mean, the ones that are still issuing them are flat out telling you it's going to take a week or 2 weeks to get it out the door because they just don't want to deal with that. So, technology in that regard has been huge for us and for the folks we work with, and actually streamlining that for them, helping them get on that or even taking care of it for them. And then, also the carriers themselves are really pushing more integration of their systems. So we're starting to see the carriers talking about, the carriers talking about integrating with CRMs more and having direct integration and overnight downloads and those kind of things that has existed in the life insurance space, but not really the disability space for a while.
Awesome. I think that's a lot of info there, Derek. Thank you. Next, we're going to really get into the kind of the processes of how to submit business and do it really in an efficient as possible manner. So I'm going to pose this question to JP and Daniel. What is y'all's typical process for quoting and or submitting in a group, either short-term or long-term disability policy? What is it? What are the services you guys are providing for your brokers that you work with that maybe make life a little bit easier for them?
Sure. Great question. And, typically what we're looking at from a group standpoint are industry risk. Are we talking about an IT company? Are we talking about, an excavating company? The age of the group, obviously that's going to drive some of the costs, some of the coverage, income, occupations, and gender. So depending on the group, the employer, I kind of look at long-term disability from a bit more of a holistic standpoint. I want to know, why do you have a $5,000, monthly benefit with 60% income protection on every single employee when we know that the needs of the employees are going to be different, regardless of whether they're a C-suite employee or they're locking up at the end of the night. So I want to know a little bit more about the demographics of the group. And then from there, it's fairly easy, in comparison to the individual world, in that we can just basically take the demographic information of the group, the industry code of the business, drill down on the occupations, the gender, the income. We send all that information. And then we have a hand in kind of navigating where that goes. We know the carriers that like maybe some of the, bluer or grayer collar risk, and those that just don't have an appetite for it. So those are the things that we kind of take into consideration. And then we go to the A-rated carriers out there and then try to honestly pin them against each other to bring the best outcome we can to the agent that we're working with and the group that they're representing.
Yep. Thank you. I would pose a follow-up question there. Daniel, what do you guys do? Let's say a broker has gets a group policy that they're looking to quote. Is that something you guys will do, a policy review type situation where somebody has a policy of a group LTD? Was that something you'll look at, let them know, hey, this is what I think needs to be fixed, and then which would then lead to a quote, obviously. But
Absolutely. Always looking for, the landmines in there, the devil in the detail. You may have one or two sentences in a 90-page certificate of coverage that can be significant at the time of claim. So, I don't, what I cringe at is a submission from someone that just says, please match current benefits. That to me, again, let's go back to the company that has some people with administrative staff and some people that are wearing a hard hat, maybe climbing a tree or jumping up on some heavy industrial equipment. I want to look at the policy. I want to review the certificate of coverage. And then, based on doing this for several years, we've got a pretty good idea of the carriers, in the marketplace and the appetite they have for different industries. So the more information, the better. And we help agents out in the marketplace with, executive summaries that they can basically hit the forward button to the employer on why we feel, this policy may be better for this situation opposed to what's currently in place. And then, hey, if we take a look at this, we want to make sure that at minimum there's no loss, no gain, but we're always trying to add value.
awesome. Thank you. I'm going to pose this next question to David, and then Derek, if you can, after he answers and shed some light on this. So Daniel and JP talked about the group process, right? What that's like. Talk about the individual quoting process that you guys go through, David. When you have a broker, what are the services you provide? What are the questions you're asking to make sure that when you get a quote, it's really a true, real illustration for the client?
Yeah, bona fide quote and how that process works. So one thing that we do at DIS is we're harpers on field underwriting, right? So it's diving into, okay, a doctor, what type of discipline does he do? Like, what is he doing on a day-to-day basis? And I'll almost break it down by percentages, because you don't want that occupation change in underwriting, right? You want that to be crystal clear. And then also we're going to look at health. So what's the guy's health look? What's the girl's health like? So surgeries, procedures, medications. Surgeries, procedures, medications. If you can ask any surgeries that they've had or upcoming, what procedures, like a procedure like, something that's not surgical, outpatient usually, and then what medications, that's going to be able to tell the underwriters in an inquiry exactly what we might be facing, whether it's mental and nervous limitations, shortened benefit periods, that whole sort of thing. So that's how we do it. Then we go and shop the carriers. We got non-DI carriers that we shop it out to. We got a 24-hour quote turnaround. Once they get our DI analyzer, which is a spreadsheet proprietary to DIS, we're going to go over that to make sure that everybody's crystal clear on that. One thing I forgot, and we backtrack, is that also it is imperative to ask if they have any group benefits, because of the coordination of benefits when it comes to the one that they're actually eligible for. And then we're going over everything. Why is it this? Why is it that? Is this the best type of coverage? That sort of thing. That's it, and that's how we propose it.
Awesome. So Derek, I'll propose this to you with a little twist on it. What do you guys do to make life easy for the producer? I know that's your tagline at the DI Center. Talk to us about the process that you guys do from a hand-holding standpoint with your advisors.
Great question. So with the DEI Center, we do have, much as David illustrated, you got to get that information up front. For us, the one thing I'll add to that is, when you're talking about business owners, we've got to drill down on what that means. We see so many times where, somebody just throws in, oh, title business owner, principal, something like that. And that really doesn't go into the weeds enough on what is that person doing on a day-to-day basis, and more so, how can we best help them get the lowest premiums possible? Because there are so many programs from so many carriers built towards business owners and giving them upgrades, giving them income upgrades, those kind of things. And knowing that is crucial. We're not just trying to bug you for more info. We're trying to see what's the best possible outcome, most suitable solution for that client. And then further to your specific question, we really take a focus on drilling down on which carrier or carriers are going to fit right off the bat and trying to drill it down from the very beginning. So we actually don't spreadsheet very often. Usually our spreadsheet is actually tiered options that we call, a loaded, moderate, basic. We avoid good, better, best just because you're dealing with fiduciary. When you get into the word best, then that's something that, unless you are a financial planner or something like that, we just try to avoid that word. And so we really try to show those tiered options, because for a physician, that may not be as big of a concern. They are going to go for that Cadillac policy. That's what they've been trained for. It's what they need. But your CPA, your attorney, those kind of occupations may or may not want or need all the bells and whistles. They may want to take, one step down, clean a couple things up, lesser COLA, something of that nature, in order to, kind of rein in on the premium and the value they think fits them. So we drill down to kind of one or two carriers first, and then build a couple of options with those most suitable carriers so that somebody can see some real difference in the plan.
Thank you, Derek. So I want to kick it back to Dave. I know you said in your answering the last question, you alluded to how the layering of group benefits and individual benefits work. I want to get your input on how an insurance carrier on the individual side views group benefits. And then I'm going to kick it to Daniel and JP. And I want to know, from a group side of things, how does the group carriers view that? So if you can, David, talk about that for us.
Yes, I'll talk about it, and it's really called coordination of benefits. And if they've got that group benefit coverage, the carrier's looking at who's paying the premium on the group coverage, what's the cap, the percentage of replacement. Those are really the basics. There might be a couple in there, but they're looking at, all right, 60% of base earnings up to a monthly cap, who's paying the premium, because whoever's paying the premium is going to say how our tax is going to be dealt with come claim time, right? Most of the time, I'm sure those on this panel would agree with me that the employer is paying the premium on that. So then that's going to be an issue come claim time for most people, because their expectation is different from the reality. So then when the individual carrier is looking at, all right, you have this, the employer's paying the premium, we're going to participate up to this amount on top, really to get you back up to that 60% income replacement total net after everything. So it also avoids overinsurance and not putting them out on a limb to pay a lot of claims that they don't really need to be paying. On the flip side of that, if I can ad lib or just add something, in some instances when group benefits aren't there or aren't inevitable, that's really the best time to implement an individual contract, because if the group comes in later, there is no coordination of benefits and they can get the best of both worlds. So basically, without taking up too much time or going really into the weeds, that's how they coordinate.
Yeah, that's perfect. Daniel, can you talk about, from a group standpoint, right? Issues or questions going into the process, right? Do they ask about other coverage like they do on the individual side when you're applying for group LTD?
Generally, you're going to see that come claim time. when we're requesting the information that we need to just provide a group health quote, or I'm sorry, a group DI quote, that's not going to be something that they're going to drill down on as far as other coverages in place. Generally, if things get messy, whatever the case might be, then it is going to come back to the coordination of the benefits, and then to a point that was made earlier, who's paying that premium, because if it is an employer paid premium, then we have a tax issue, and that's going to be viewed as income. So that 60% $5,000 benefit isn't going to work necessarily for maybe some of your C-suite folks out there. And then to reiterate the fact that you want to secure that individual long-term disability first, and then if the timing is there, the crystal ball exists to where the group benefits come in later. That's honestly the cleanest way that it can be done. And there's probably a lack of education out there in the marketplace about the importance of securing one before the other, because that sure will rear its head come claim time.
Yeah, I think you added a very good point there. Is I think if anybody gets one tidbit of information out of this webinar today, it's really that coordination of benefits. I think we need to educate our clients way more than we have been doing on what that really means come claim time. So I'm glad you brought that up, which really leads us into a question that came in about how Social Security benefits tie in or work against you from an individual claim standpoint. So Derek, True, can you talk about that? What effect, if any, does Social Security benefits have on an individual DI benefit that's getting paid out?
Good question. In most cases, none. The Social Security is not a concern, simply because the way that policy was built, to where there was no worry about integration with Social Security or workers' comp, or even a state program, if you're in a state that has one of those. There are riders on individual policies where you can bring that premium down, bring the premium down and have it do a little bit of coordination, not the whole, but maybe $1,000, $2,000, that monthly benefit does coordinate with Social Security. And we've got some, producers and clients that like to do that to, again, bring that premium down a little bit. But for the most part, your policies for your high level executives and professionals, physicians, dentists, attorneys, those kind of people, they typically do not have any coordination. And it's what we would call, double dip. You get to take your benefit, even if you're getting Social Security, and even if you can go work in another occupation, you're getting paid for that too. And it's very rare, but technically you could make more money disabled according to your own occupation than you could actually doing your job you had before. It doesn't happen very often, but it is possible with a lot of those policies.
Awesome. Thank you, Derek. Next is for JP and Daniel. If you guys can, a question has come in. I guess somebody's wanting to know what are the benefits to an advisor for growing their employee benefits block of business? Is it just short-term and long-term disability, or is there a multitude of products that become available when you get into a work site type scenario?
Great question. So, as far as expanding that benefits block of business, if advisors are out there, agents are out there, they're talking with anyone who's influential within their company to at least get a look or a peek. There's an acronym in our business with long-term disability that I absolutely loathe, and it's called LAST to discuss. When you look at the overall benefit package that an employer is offering, and you look at the premiums from a long-term disability policy, you're making up, sometimes 1%, 2%, 3% of the overall spend on the benefit package. But you could argue that the long-term disability benefit is the most important benefit that can be offered out there. So that's something that I really try to harp on, is to really dig in there. And advisors that already had that audience, if you're doing a thorough fact finder and you're understanding the benefits that are available, or for maybe a 1099 person, the benefits that aren't going to be available, you're going to be a much better advisor, kind of taking that holistic approach. And honestly, I spent some time at Northwestern Mutual, and the advisors that were writing any level of group benefits, be it group life, disability, dental, vision, health insurance. We helped with all of that, and it can keep you in the game longer, which I know is something that the Northwestern was tracking. Advisors that are writing group benefits, you don't have a great core month with your individual products, then you still had the residual income coming in off of the group benefits. So once you get the audience, as you all know, that's the hardest thing, but it's a lot easier on the group side because of some of the liberal and loose underwriting that we might have, but the policies are also going to be a little bit more restrictive. So it's good to do a thorough fact finder and really understand what everybody has options of getting, whether it's through the workplace or if they're securing those things on their own.
Can I add something to that? Because he hit something in there really, really good that I want to share. Sorry, I felt compelled. When Northwestern Mutual does track that, and they do a great job. And actually, your probability of success when you're entering into the career agency system, when you're adding different lines of product, not only has your higher probability of success, but it also increases the retention of that client. So when you have one or two contracts or accounts or what do you call that, whatever you want to call them, policies with a client, it's very easy for the next guy to come in and unwind that. You add life, disability, you have the group benefits, the assets under management, the investments, all that stuff. That's hard for them to leave you. Plus, then you are being truly holistic, and your client retention is going to skyrocket. Sorry, you just hit something really, really important there that I want financial advisors to know. The more lines of business, the higher the retention is for the client and your retention in the business.
Yep. Which, I'm glad you interrupted there, because you kind of set the stage for really the next question, which Derek, if you can, we all know that not every advisor, especially in the group space, is offering group short-term, long-term. And if they do, they probably don't cater the group benefits to the group, right? It's more of a boilerplate, like Daniel talked about earlier, whereas you want to really build the group to fit, or the policy to fit the group. Talk to us about really what you see when you come in, as far as maybe putting in some type of executive benefit on top of a group plan, and what that looks like, and really talk about us through that process.
Sure. So, when you get into the group space and the employer space, we call it reverse discrimination. The people that are best served in the disability are actually the lower income earners. They covering, 60% plus of that income, they're good. And, maybe a small supplemental policy could benefit them, but there's really not much shortfall there, versus your high earners, your executives, the partners in those companies. And that could be anything from, a law firm, which is really common, to physician practices, to even, some sort of construction company where the head guy isn't actually, going out to job sites much anymore. He's running that company. He's got a bunch of subcontractors, and there's a massive shortfall there. So there's a lot of executive and owner opportunities in those spaces, because they have a huge shortfall of a plan that only covers maybe 60% to 5,000, and that person's making 300, 400, 500 grand. That's massive. They're only covering 20% of their income, forget 60. So there are a lot of voluntary or employer paid plans that you can do. You can either go worksite or guaranteed standard issue, which is a lot more of what we see in the disability space, because you can do it depending upon the carrier on as few as 3 to 5 lives. And you can go get those options where it's a couple of knockout medical questions. You're not doing full-blown medical underwriting, and you can get pretty aggressive offers depending upon, again, who's paying the premium, number one, how many people are you covering. We do a lot of carve-outs where, you've got maybe top 10 executives in a company, and you're only covering that C-suite, or you're only covering those with ownership, et cetera. So there's a lot of chances there. And to David's point earlier, being that holistic advisor, making sure that the people actually calling the shots are taken care of, because group a lot of the times is leaving the folks who are putting the plan in place totally in the wind, and they don't even realize it. All they were told is, oh, we have 60%. So they think they have 60% too. And it's shocking how often those owners and partners have no clue that they're actually grossly underinsured, and they're the one being discriminated against, not the others.
Yep, Derek, that's very good info. Dave, I'll kick it to you. Talk about what GSI is specifically, and then how does somebody know if they have a prospect for GSI? What does that look like?
This is for me.
That is
Yeah.
yes, sir.
So I like to start off when I'm talking to brokers or advisors, when we're talking about GSI, it's more of an art than it is a science. All right. So it really is this a case for GSI? I don't know. Do you have the census? Let's look at it. So, because also, do we have the group benefits? Because a lot of times GSI is predicated on what they have underlying. There are carriers out there that will do a GSI carve out when they don't have any group benefits, but a lot of times it's predicated on that being there. But it all is going to start with the census and the incomes and the amounts that they already have. So when you're thinking, like, when you're an advisor, if I was an advisor and I've got a group census, I'm not going to make the decision until I talk to somebody like us on the panel. And then it's going to go to the carrier to see which carriers are going to bite on this, to which ones is going to make sense. Because like Derek said, you can get GSI down on 3 lives. There are carriers out there, but it's got to be good for the carrier to take on that risk, because what happens in GSI a lot outside of those knockout questions is you do have the potential for adverse risk. You do have the potential for a lot of females, right? For those that, like, I'm not trying to discriminate against them, but their cost of insurance is higher, right? So a lot of times with GSI, you get unisex rates, so then they're deeply discounted and they've got high claims. So that's why it's an art, more of an art to a science when it comes to GSI. So if you're an advisor out there and you want to get in that market, 1, get into it. Number 2, realize it's an art, and then talk to Blake, talk to Daniel, talk to Derek, talk to your experts, man. Don't try to do it alone. And then what you'll see is great employee retention at that employer group, because you're satisfying the reverse discrimination. Plus, you're building an inventory of clients that you can go and talk to year after year after year, because they're going to hire and they're going to grow. And then that's more people you can add to this GSI point. That's how I look at it. Probably left some things out, but yeah, it's more of an art than it is a science.
I like that art than a science. That's very true, because as we know on the call, right, a GSI case is not a, hey, I want to cover these 5 people, let's get it done. There
Right.
really is a process, sometimes more of a process than fully underwritten. The only difference is you don't have to take the medical exam, right?
Yeah.
It doesn't mean guaranteed easy issue. It just means you're guaranteed to get a policy issued at some point.
Yeah. Yeah.
So I want to talk about the small business marketplace. And Daniel, if you can, talk to us about, on the group side of things, what is the smallest number of group that you can cover? And then separately, something I run into a lot in my practice is husband and wife owned businesses. Maybe it's 2 employees, husband and wife, and they have some contract laborers or whatnot. Talk to us about what carriers are doing to really combat or solve that problem for a small business owner.
Great question, because I can tell you that the small business owners out there, few and far between, are really taking a look at, the disability, maybe adding a supplemental on top of it. They have a few more concerns ahead of that, and quite frankly, some other employee benefits that they might be providing that are just, at a much steeper price point. So we have one particular carrier that we work with and have a great national offering, particularly for employers in the 2 to 99 space. And the unique part of this offering is we have a carrier that does life, short long-term disability and supplemental life, but we can use each line of coverage for what we need to make participation. So if we have a situation where maybe it is that, law firm and we've got one attorney and 3 staff, and we only have the one attorney who's looking for long-term disability benefits, but we need to get something else in place to form a group, maybe a small $10,000, supplemental life policy or something like that. So there are unique ways that, small businesses can either roll these benefits out voluntarily, use the combined participation offering that we have that, is a great fit for that, that 15, that 20 life group. They might have a small group health plan, but how many people in there can afford long-term disability insurance, and how many actually need that more than the 60% to 5,000 benefit. So it's not too common when you see a small employer, I'll say under 20 employees, that has a robust disability program. But we definitely have carriers that we can go to and have a few loopholes out there to ensure that we can get those mom and pop shops a fairly decent, group type of policy where you're going to have some guarantee issue, maybe not the limits that you might see on an individual policy. But again, we're not poking or prodding or putting anybody through the underwriting process. So, we have to look at the group itself, make sure it's a fairly eligible class that we can kind of work through underwriting with. But yeah, one carrier in particular has been great to us as far as using the combined participation to help ensure that the people within that group that can afford the long-term disability that it's important for are able to get those benefits.
Awesome. Thank you, Daniel. Sticking with the small business owners, Derek, if you can talk to us about a BOE product or a business overhead expense product. And specifically, I know a lot of these products today have a loan repayment rider feature on it. Talk to us about what a BOE product is, and then how you are implementing that in some advisors' practice today.
Sure. So first, I'll just say I love what Daniel said about the creative solutions. I mean, that's just one more reason that you got to tap into, somebody that knows the disability space a little bit, like David said, a Blake or somebody in your area, because those creative solutions exist in the disability world, both group and individual, and they're not difficult. They're really not. They're just maybe not what you would think about or what somebody would be the first blush. So regarding the question of, what other products are out there in the business products, there's, again, a lot out there that people aren't aware of. We actually teach a whole hour-long CE class called Not Your Father's Disability Insurance, because this is not your father's space. There's business products, there's key person products, there's buy-sell products. And, specifically for loan, we see a ton of dentists, especially in veterinarians who carry a lot of debt, go after these business loan policies where, typically people think of business overhead, which is built to actually cover your fixed expenses. So it keeps your light on, it keeps your people collecting their paychecks long enough for either you to come back if you're too sick or hurt to work for a little bit, or to find, somebody to buy the business or sell the business out. Because we all know a lot of people on here are small business owners themselves. Think about if you take a 2-week vacation, what happens to that business? If you disappear for 2 months, 6 months, the idea that the business will just be okay, no, it won't. You built that business. You are key to it. You're pivotal. And sometimes we maybe overshadow that or forget that. So, you have the overhead products that can cover those fixed expenses, keep the lights on, keep things moving till you can figure out what your next steps are. And then you've got the loan policies that they can go much beyond your typical 12-month or 24-month overhead, and they can literally pay that loan off for you. So you've got a 10-year note that's a total $1 million note, no problem. You build the overhead for the practice for your monthly expenses to figure out what you're going to do, and you build that loan to pay the bank back directly. There's also, student loan riders on the individual policies that a lot of people don't realize have come out in the last few years with multiple carriers. So there's a lot out there. Like I said, the key person, the buy sell, you can fund just about anything that you need to fund for disability if you just, know to start looking and asking for it.
Awesome. Thank you, Derek. Let's talk about one of the questions that I get not, I don't want to say quite often, but a good bit is, I have a high net worth individual. They don't need DI. Dave, can you talk a little bit about what in your practice have you seen where maybe you could probably sell against that thinking that a high net worth individual probably does need some form of disability insurance?
Yeah, so that's going to come into even more in-depth fact finder, I believe. So high net worth, what does that mean? Is it liquid? Is it illiquid? What's it wrapped up? Is it wrapped up in real estate? Is it going to be the right time to sell that real estate if they got to get that money because it's got to be converted to cash for them to use it, right? Is it passive income? Because, once you have X amount of passive income, the carriers might not even offer it to you. So actually, that might not be a reason for them to get it. But I would say the high net worth, we got to find out what that means, where that money is located, and if they even qualify for it. So that's the domestic carriers will probably shy away from it. But there are carriers out there that will issue up to $100,000 a month. Somebody else can probably even tell me it's probably even more than that. But if it's wrapped up in real estate, if it's wrapped up in a lot of other things that can't be converted to cash real quick, I would probably say that's a good argument for disability income insurance, right? Because if you sell those holdings at a loss, well, you're also disabled, you're losing your income, and then you just lost all your assets too, right? Yeah. So I would do the fact finder, ask the questions, find out where it is, get nosy. It's easy for me because I got a big nose, so I can get in there and get nosy, and then find out if it does make sense. And then at the end of the day, you know what? If it doesn't make sense, then you don't sell them a disability policy. But I bet you there's probably instances where it does make sense. So that's my argument for it.
Awesome. So the final question, and we'll end on this for everybody. So we'll go around the room, and we'll start with Derek. What is the one thing that you would want the people on this call to know that is easy about adding DI to their practice? What's one sales idea, one thing they can do to their practice to really jumpstart their 2020 DI sales campaign?
Great question. So the one I would throw out there is, use disability as a door opener with your small business clients. Again, those overhead sells, those business overhead, the disability loan provisions, nobody's talking about that. They just aren't. And we see so many producers that go in and just start asking about, okay, how would you pay your bills if you took a month-long vacation? If you just couldn't be here, who's paying for the person, at the front desk when I walked in? Who's making sure that, the bank is paid off? Because a lot of people think about the individual disability insurance space only, and that's vastly important. We talked a lot about this call about that. But if all you have is individual and you have a thriving business, well, okay, you're going to take care of your family. But for most of those people, that business is their baby. And you just threw the baby out with the bathwater because their family's going to be okay and they're going to be all right. But they just lost, what they built for 10, 20, 30, 40 years. And literally nobody is talking to them about that. And we see a lot of people who maybe they don't even make the business overhead sale or the loan sale, but just being that expert, having that more holistic conversation, they end up taking over the group benefits. They end up taking over the individual policies and doing the life insurance or the AUM, whatever it is. And that's just a huge opportunity to just get in there and be totally different than anybody else that's tried to talk to them.
Thank you, Derek. Daniel and JP, last question for you guys. Same thing we just posed to Derek. What's the one thing that you would want people on this call or advisors throughout the country to know, an easy way to add either some group short-term, long-term, or ancillary products to their business?
I love this one, and it takes a little bit more work, but I can tell you that there's not a lot of people out doing this kind of diligence who are in the group benefit space. So, we had talked a little bit early about, the group long-term disability insurance. You may have a fairly vanilla policy, but if those benefits are employer paid and that employer's taking the tax break that he or she, may provide by offering these benefits, that's going to look at as income. So that, $5,000 a month policy, you're far from even the 60 that you think you're going to get after it's all said and done. So what I like to do, or at least this idea will help show that you do know what you're talking about, is talking to that employer about grossing up their group short and long-term disability coverage. What I mean by that is employer X pays the short and long-term disability premiums on behalf of their employees. Well, if and the group carriers have mechanisms in place to do this, if the employee pays the tax on that premium, we generally see that annually, and you think the taxes on disability premiums throughout the year are going to be significant, at least is not as significant as when the benefits become payable on a tax-free basis. So do a little research on grossing up short and long-term disability plans, and if anybody needs any help or guidance on how that really can impact an employer, bring those benefits to the table on a tax-free basis. That's something that you're not going to see a lot of advisors out there talking about, is grossing up their disability plans to get those benefits tax-free. That's something that's it's fairly common in the marketplace, but you don't see a lot of people in the group space doing that. They're more putting vanilla plan designs together and moving on to the next thing. So that's one nugget that I would advise everybody to kind of get up to speed on, is grossing up those group plans.
Yeah, that's very good info. And David, before we pass the last question to you, we do have a question that got sent in by Jeffrey Hill. And I'll shoot it to Daniel on the group side, and then David, if you can, on the individual side. What is the oldest age someone can get approved on a group and a business DI? So Daniel, you want to speak to the group side of that? What's the maximum age? And then David, I'll ask you to speak to the individual side.
On the group side, there is going to be a point where it's not going to make a whole lot of sense for maybe that older employer who does have some significant dollars that they're receiving, whether income bonuses, whatever the case might be, to partake in a group disability plan, particularly when you have Social Security in place. So I would say that after about age 65, when you're looking at what the cost might be for that employee, and then you look at things on the group side that we have that the individual side does not, one of the most common offsets we'll see is Social Security income or supplemental security income for disabled adults and children with limited resources, or we might see some offsets if it's workers' comp. So I'd say, I hate to do the rule of thumb there, but at age 65, once there's an ability to secure some Social Security dollars, or even prior to, that's when some of the offsets will come into place with the group. So that's probably where I would look as far as a cutoff or a rule of thumb there.
Thank you, Daniel. David, on the individual side?
Yeah. So domestically, the carriers that are here domestically, it's basically 60. There is a carrier that'll go to 62 domestically. But the broad answer is, I believe it's up to age 75 in some of the Lloyd's markets that actually you can get insurance as long as they got to be working, right? You got to have an earned income. But yeah, you can get up to age 75. And then you want me to answer the other question that's added? So I've thought about this question a lot, because that's part of what I do, is I have to bring ideas to the financial advisors. And especially in times like today, I think COVID-19 has done a good thing. I'm trying to choose my words. I'm trying to not sound insensitive, but bringing paycheck protection to the forefront of the conversation. Now, everybody's paycheck is all of a sudden super important, right? And Bill Gates said this perfectly, and it's something that I've been saying forever, is that the reason the United States wasn't properly prepared for a pandemic is because it's very hard to put money towards something that may never, ever happen, right? So we know we're going to die, right? So life insurance is pretty easy. You're going to die. You just don't know when, right? So you better have it when that happens. But if cancer comes dressed to the nine, knocking at the doors, you don't know when that's going to happen, and it may never, ever happen. So how is it hard? How are you going to sell a disability policy? Well, I look at the disability insurance now as that's the PPE for your financial plan. That's the PPP for all your assets, right? That is your personal protection equipment around anything that can possibly happen when you navigate your own personal pandemic or your own personal recession. So how do you sell it? You start talking about it. You know, and I have this dry erase board. I don't know if you guys can see it, but I'm all about the order of operations. Please excuse my dear Aunt Sally. That's how you solve a math problem. You know, we need to do things in the order in which they happen. And my buddy Mike Cogdale says you never die and then get sick, right? So if we're selling life insurance, I'm a believer in life insurance. Everybody needs it, but also you never die and then get sick. So if we're doing it out of order, we're going to get the wrong answer to the problem. So number one, you got to talk about it. It's never been more prevalent in the marketplace. Derek said it perfect. It's never been easier to buy it. So call your clients, you owe them a conversation, talk about the risk protection package in case anything happens to them. That's
Awesome.
That's how I do it.
Well, guys, thank y'all very much for your time today. I know I got probably a page full of notes, and I'm the one that kind of structured most of these questions. So you guys did an outstanding job. Thank you very much to David, Derek, Daniel, and JP. And thank you for everybody that took their time to join into this webinar. Thank you all very much. And thanks for NAIFA Louisiana for putting this on.
Thank you so much, Blake.
Absolutely. Thank you.
And for those of you that want to see the recording of this presentation, we will have it available on the NAIFA Louisiana website. That is www.la.naifa.org. It'll be under the events section under the NAIFA Louisiana DI Day. We will have that posted hopefully by the end of the week, if not early next week. So once again, thanks everybody for joining us, and we look forward to future shops with you.
Thank you.
Thanks everyone.
Awesome. Have a great day.